The previous day high and low strategy is the key to trading every single daily candle. The best way to simplify your daily bias. Now, what you want to be focusing on is what type of candle we are creating, okay? So let's first understand our candle anatomy. For a bullish candle, we have our low, high, and the close is right at the low point, okay? And this is exactly what we'd want to see on our lower time frame. Some sort of consolidation or accumulation, the manipulation, and then price distributing to the upside. We then close price and then create our major body, okay? For a bearish day, we'd have our high, low, the opening being closer to the high, and then the close being closer to the low point. And on the lower time frame, what you want to see is your accumulation, manipulation, and distribution. Our entire AMD model is stemmed on this one daily candle, okay? This strategy has shown me a very great result, which I will show you guys at the end of the video. If you guys also want to see the full unedited backtesting session of this entire strategy, make sure to join the free Discord in the description, or as well book a free one-on-one call with me where you guys will get extra clarification on this exact model I'll be sharing with you today. Now, what you will be learning in this short course is our candle impulse theory, the CIT model, as well as the market conditions where our daily high and low strategy works the best in, how to enter on the lower time frame, okay, how to use our midnight opening, as well as the correct way to use the 8:30 opening range, okay. We also stem into the type of daily candle you should be using, the exact Fibonacci levels price should first retrace to for you to even enter a trade, and then when our setup would become invalidated, as well as how we spot the right range. And after all of this, we'll then dive into some chart examples and then our backtesting results of this amazing strategy, okay? If you guys want to skip through to different areas, the chapters will also be left in the description. But if you want also a more pleasurable watching experience, make sure to watch this in 2x speed. Now, enjoy this full comprehensive lesson. One more thing, you would have to also watch our trading every single candle video, which would be the prerequisite for this video, so you have a good foundation. And that will also be in the cards above or in the description. Now, our previous daily high and low strategy stems off of this one exact model that we have created, our CIT model, okay? What we'll be focusing on is our previous candle's closing price. As you can see right here, our previous daily candle stemmed up with this high point, the low, the opening, and the most important part, the close, okay? Because majority of the time, when the new daily candle opens, it will open at the exact area where the close of the previous candle happened, okay? Now, this is very important to us, okay? Because majority of the time, we can position ourselves in a position where we enter at the wick, and then once price starts to extend higher, we can then enjoy the profits and even take profits at the previous candle's high. This is the power of trading this exact strategy, okay? It follows the continuation of all our daily candles, which allows us to trade every single day with these high probability setups, okay? Now, main thing I said is you want to focus on buying below this PCC, okay? Now, guys, as I said, one more clarification on this and our other models, make sure to book a free call. That will be in the description, first link, okay? As well as if you want the free PDF of this entire strategy, that will also be in our Discord in the cards below, okay? Now, this is our bearish example. Same exact thing. We would want to see price go above our PCC. So at that point, we'll then be entering at the wick of this candle. Then we can get to enjoy once prices start to become a lot more bearish throughout the day, okay? We can then also target our previous daily candles low. This is the most important part and most integral understanding you have to use the strategy to its fullest potential, okay? The progression of the daily candle throughout the day. On a bullish day, the current day that you are trading, you want to make sure it starts off as a bearish candle, okay? Because this is how price will then start to make that wick once it starts to push high, okay? As we spoke about before, price starts off with the accumulation, the manipulation downward first, and then the distribution to the upside once you start to see this major body, okay? And in the specific type of candles we like to focus on it'll be very high volume candles. So major bodies, minimal wick, okay? Or we could have a scenario where we have price making a major body and then an indecisive candle. But this is very similar to what we spoke about already, our stop and go model, which we went highly in depth into in predicting the next candle video, which is on the channel, okay? Right there, price makes a quick pause in volatility and then continues it after it now gets below that PCC and then continues higher. This is our continued impulses, which is major volatile candles. This is by far the best position you want to position yourself into because you get to enjoy price just extending higher throughout the day. Now, here is a very important part that you also have to focus on. It is the Fibonacci levels of the previous daily candle. Many people do not go in depth into this, but I will. Once you draw out your previous daily candle, mark out the high and the low point, you then draw out your Fibonacci levels, okay? These Fibonacci levels will also be in the description below, okay? All we have to do is just tweak your Fibonacci settings already. Mark out a 0.25% to illustrate your 25% level, your 0.5 to illustrate your 50% level, and a 0.7 to illustrate your 70% level, okay? You would want your current day candle to at least retrace to the 25 or the 70. Once price starts to go beyond the 70%, I would identify that as an invalidated setup, okay? Our best models occur around the 25% because remember, in a highly impulsive market, you only want very short, minimal retracements before price makes that continued impulsive move to the upside, okay? Which we can clearly see on this infographic right over here. Marking out that low and that high, our entire range, we just start to see the next candle create that accumulation and start to manipulate, making a retracement to the 25%. From that point, we then see price start to extend higher, where you can take out your profits at either the first high or just start to allow price to continue higher, okay? Now, here is a very quick tip on how to silver line your entry models, okay? Using these two confluences, your midnight opening and your 8:30 opening, okay? In a bullish example, you want to be buying below the midnight and the 8:30 open, okay? So in the most ideal setup, okay, you'd be buying below the midnight, 8:30 and the previous candle's close, okay? That will produce the highest probable setup using our daily high and low strategy, okay? And then for a bearish example, you want to be selling above these levels, okay? Above your midnight and above your 8:30, and that also creates to you your perfect previous day high and low strategy, okay? Now, we've already discussed what we'll be looking for on our higher time frame, okay? On our daily. Now we have to understand what we'll be diving into once we scale down to a lower time frame, okay? The first main model you want to be focusing on is your total soup, okay? Because it is highly predetermined that once price starts to open the new daily candle, there's some sort of liquidation, okay? And majority of the time, it would be a liquidation of a very most recent low point that was just created before price transitioned into the next day, okay? As you can see right here, we had our previous day's recent low, and then price transitions into the new day with an accumulation, okay? Manipulation back down, sweeping out that area liquidity, and then price then starts to extend higher. This would be the exact point you want to be entering on, okay? Also below our previous candle close, okay? As you can see right over there. And now our next model is us directly correlating to the exact daily candle. We will be trading our accumulation, manipulation, and distribution. Here's a beautiful schematic of this. We then see price start to firstly accumulate in the start of the day, manipulate, creating that wick, and then start to distribute where you would be entering your trade, okay, over any fair value gap or order block, and then you get to take out any profits once you reach the previous day's low point for a bearish example, or the previous day's high point for a bullish example, okay? Now that you guys understand that, let's get into how we want to be entering this, okay? On the daily time frame, as you can see right here, we have our kind of high, kind of low, and then price comes into that 50%, okay? Which I also like to quote as the previous candle's equilibrium, okay? And here you can see it beautifully on the 50-minute time frame. Here's the low of our range, the high of our range, price then starts to extend higher, but then it comes back down to create that liquidation at the start of the new day, where it will first create a super liquidity, tap back into the 50% of our previous day candle, and then we start to see price extend higher. Now, here's a simple trading plan on your daily time frame. We have just discussed we're looking for our candle range, where we start to mark out our previous candle close, the high, the low, draw out our Fibonacci, identifying the 25%, 50%, and 70% retracement. From there, you then scale down to your 50-minute time frame to either look for the price going below the PCC on a bullish day or above the PCC on a bearish day, okay? And then lastly, you can also look to scale on the 5-minute time frame for more refined entry models, which is our telescope and our AMD model, okay? The Power 3. Now let's get into some chart examples of this. Now, this is Nasdaq on the daily time frame. We simply firstly mark out our candle range. Here is our low, our high, and the most important part, our previous candle close, okay? And as you can see right there, there's the start of the new day. Now on the 4-hour time, we can just start to see this range even a lot more clearly. And if you want to get a bit more extra confidence, you can add in our candle range theory, which we spoke about in previous videos, if you want to enhance this exact strategy, okay? Now you can see on the 50-minute time frame, we now draw out our entire Fibonacci range, okay? From the low towards the high, we identify our 25% as our first retracement level, the 50 as the second, and the 70% as a precaution level, okay? If price starts to extend past this, we can take this as majority of the time an invalidated day. And here we go. Here is what we start to see at the start of the day. Price making that bearish movement. This is the exact scenario you want to be positioned into, okay? Because now we understand this is price manipulating and as well creating the wick of this current day, okay? As you can see, it comes towards the 25%, okay? And it is also retraced at the midnight open, okay? Right over there, we then enter off of a simple order block once you start to see price playing around at this level, okay? And there we go. As you can see, we bought below the midnight opening, and as well, we start to see price start to extend higher, going towards that previous daily high as our TP point, okay? And there we go. That once bearish candle has now fully started to flip bullish and now starting to create that major body, okay? This is the key defining factor of this exact strategy. You are literally trading the current day's candle, and this is why you can even look to trade every single day's candle using this exact strategy. And there we go. Ending of the day, we have this massive bullish candle, and that is why I say you can also look to extend your TPs higher if you see it needed be in a very volatile market, okay? Now, our sell example would be off of our bearish candle, okay? Drawing the highly volatile major body high and low of the day, of the previous day, marking out also our previous candle close. And there we go. There's the start of our exact current day, okay? And there we go. Here's the exact scenario we wait for, okay? Price starting to make that bullish candle in the start of the day. That means it is retracing. That is what we wait for, okay? And on the 50-minute time frame, what can we identify right here, okay? Simply an accumulation which is denoted by this consolidation, that manipulation we price us to break up, okay, into our 25%. And here on the lower time frame, we find our entry off of our inversion of this fair value gap, okay? As you can see, throughout the day, we then see on the 5-minute time frame, okay, with the entry model, the price starts to extend higher, come back, and fully melt down towards that previous daily candle's low. And there you can see, once bullish candle now just leaves behind a wick, okay, of its former glory, where now we start to see that massive bearish candle follow through, okay? And that would have been your trading day done. You've fully traded the exact daily candle of that specific day, okay? Only using your previous day strategy, okay? Focusing on these high and low points and our impulse theory. Now, here's some of the backtest results from our session testing the strategy, okay? We're about to show you guys the edited formation of this entire backtest session. But if you guys want to see the full unedited breakdown of this, it will be also in the Discord below. And make sure, guys, if you have any questions about this exact model or you want to enhance your trading, you can also make sure to book a free one-on-one call with me specifically. We will learn how I trade this model every single day, and we'll see updates of this in our Discord server below.